Welcome to the Income Tax Assistance Volunteer Training for Tax Year 2021. I am Francine Schoonmaker, the Director of Operations for the Office of Tax Policy Analysis at the New York State Department of Taxation and Finance. I am pleased to be recording this presentation for you as the COVID pandemic has continued to cause limited in-person visits. I would like to start by letting all of you know how valued you are to our department. Your assistance to those taxpayers that need it most through tax preparation and other financial literacy services is essential to the communities you serve and to New York State as a whole. Our goal is to make sure you have the information you need to help others. So let's review our agenda. We reworked our volunteer training presentation this year to better match the flow of the New York State return. You will notice we do not have a specific What's New section. Instead, we added new icons to any pages that reflect brand new items like new legislation, and an updated icon to reflect sections that were updated for other items. As you can see from the agenda, we added more sections to explain the different areas of the New York return. So after we cover general volunteer resources, we will then go to New York State filing requirements, New York State income and adjustments, New York State modifications, New York State standard and itemized deductions, then New York State credits, New York State personal income tax filing, some reminders, and finally, other department messages to be aware of. We hope you like this new format, so let's get started. As a volunteer filing New York State tax returns, you are required to meet all the federal requirements. However, there are no additional requirements to meet for New York State. New York State does not have any additional test. If you don't meet the federal requirements to complete federal returns, you can't file New York State tax returns. What you will want to do is to fully review this training presentation and familiarize yourself with our volunteer website, which we will cover in a minute. This is just a reminder of something that is covered in your federal trainings, but it is extremely important to New York State as well. You will be looking at and working with a lot of personal information. Volunteers must keep all information confidential, safeguard it from unauthorized individuals, and prevent its misuse. We know if you pass the federal training that you are familiar with this rule. However, it is so important in the world we live in today, we just wanted to remind you one more time. So now that you know what training is required, let's get into where you can find the information you need. All of the information you need to be a volunteer working on a New York State tax return can be found in our Volunteer Resource Center at www.tax.ny.gov/volunteer. But the key information you need can be found in these topic lists of training materials, popular forms and publications, resources for taxpayers, and get help. Let's go over what you'll find in each section. The training materials section includes all the training items that will help you throughout the season. Obviously, it houses this training and the recorded version, a military personnel training, which has specifics for those serving in the military, a link to the materials in the 2021 Free File Assistance Volunteer Packet, the TP 301 updated for 2021, the pension subtraction handout, which helps answer questions on how taxation of pensions work, and finally a link to a page which houses all of our older training presentations from the past couple of years. The Free File Assistance Packet has the main forms in it that are needed for filing. We include the IT 201 packet that has New York State, New York City, and MCTMT in it. Then the IT 196 for itemized deductions and the IT 225 for New York State modifications, as well as the IT 558 with the decoupling adjustments. The IT 195 reflects how taxpayers can allocate the refund they have coming to them as well. In addition to those forms, we have the IT 227 for voluntary contributions, the IT 214 claim for real property tax credit for homeowners and renters, and the new IT 229 real property tax relief credit, and the New York State 210 claim for the New York City school tax credit. We also include some informational items. The DTF 215 Earned Income Tax Credit Record Keeping Suggestions for Self-Employed Persons, and the CO 309 How Are You Paid for Your Work or Services. These items are great to hand out to taxpayers who are not sure what they should keep for their tax records when they are self-employed. While we mail out the packets, these materials can be printed from the Free File Assistance Volunteer Packet page as well. If you're looking for these packets to be mailed, please send an email to taxpartners@tax.ny.gov no later than December 20th, 2021. Include your name, email, and mailing address, no P.O. boxes, the number of packets you need, no more than 5 as we're limited, and any other forms and how many. Packets will ship no later than the week of January 17th, 2022. The TP301 is the intake questionnaire that provides guidance on income, expenses, deductions, and credits that do not automatically carry over from the federal return. New York State additions and subtractions, New York State only credits, pension exclusions, New York State, New York City, and Yonkers residency questions are all included. We had a few updates on the TP301 for this year. We clarified question 1 to reflect it is the recomputed federal adjusted gross income we need to look at instead of the federal adjusted gross income. We also updated the household income on question 8, and we added 2 new questions. The first question, did you repay any amount of income received in a prior year that was previously included in New York adjusted gross income? That is, if you were overpaid unemployment income last year and had to repay a portion of this year that did not reduce this year's unemployment income. This question will help identify if a new subtraction modification is needed based on a law change that allowed for income that was taxed, then repaid under certain circumstances to now be deducted. It will matter most if you have taxpayers that were paid unemployment benefits in 2020, but then were asked to repay them in 2021. If they were still receiving unemployment and there was enough to cover the amount to be repaid, there would be no adjustment as it would be offset in their unemployment benefits for the current year. However, if they did not have enough to overcome or didn't have any unemployment benefits this year and had to pay back some, they should get a 1099 reflecting the amount repaid, which they can use to deduct on their New York State return. We feel you may see this, so we wanted you to have a question on the TP301 to look for it. The second question is, did you own and live in New York State real property for more than 6 months, receive the STAR credit or exemption, and pay real property taxes? This question will identify if a taxpayer may qualify for the new real property tax credit that we will discuss later on. Other resources available to you can be found on our website, like forms and publications. You can also get many documents in other languages. In addition, limited additional quantities of some forms can be mailed to you during the filing season. Order by sending an email to nystax.speq@tax.ny.gov. Finally, during the filing season, the Tax Practitioner Hotline is available as a resource for your questions. Just don't forget to identify yourself as a volunteer, or they may send you to the other line where the waits are much longer. This line has shorter wait times, extended hours during the peak season, and experienced staff answering questions. Remember, do not give this number out to any taxpayers. Now that you know where to find resources, let's get into the New York State tax return. New York taxpayers will have until April 18th, 2022 to file their 2021 tax return because of the Emancipation Day holiday in Washington, D.C. Taxpayers in Maine and Massachusetts will have until April 19th, 2022 because of the Patriots' Day holiday in those states. When filing a New York State tax return, the first thing you must determine is residency. You need to know if the taxpayer is a resident, non-resident, or part-year resident. If the taxpayer is a resident for New York State income tax purposes and is required to file an income tax return, they will need to file Form IT-201 Resident Income Tax Return. If the taxpayer is a part-year resident or non-resident for New York State income tax purposes and is required to file an income tax return, they will need to file Form IT-203 Non-Resident and Part-Year Resident Income Tax Return and Form IT 203-B, to report where in New York State the taxpayer lives. A taxpayer must file a New York State resident return if they're required to file a federal return, they're not required to file a federal return, but their federal adjusted gross income exceeds $4,000 or more, $3,100 or more if the taxpayer can be claimed on another person's federal tax return. They want to claim a refund from any New York State, New York City, or Yonkers income taxes withheld from their pay, or they want to claim New York refundable or carryover credits. To be considered a resident of New York State for tax purposes, an individual must fall into one of two categories. Domiciliary, the taxpayer's domicile is in New York State, meaning they live in New York, or statutory resident, the taxpayer's domicile is outside of New York State, but the taxpayer maintains a permanent place of abode in New York State, and the taxpayer spends more than 183 days in New York State. What is a permanent place of abode? A residence, a building or structure where a person can live that you permanently maintain, whether you own it or not, and is suitable for year-round use. A permanent place of abode usually includes a residence that your spouse owns or leases. You may also have to file a New York State return if you're a non-resident of New York and you have income from New York State sources. You need to determine if you're a resident, non-resident, or part-year resident before you can decide if you need to file a return with New York State. Many taxpayers have been asking how New York is treating the fact that so many non-residents are telecommuting due to the pandemic. We have a long-standing rule in this area. If you're a non-resident whose primary office is in New York State, your days telecommuting during the pandemic are considered days worked in the state unless your employer has established a bona fide employer office at your telecommuting location. There are a number of factors that determine whether your employer has established a bona fide employer office at your telecommuting location. In general, unless your employer specifically acted to establish a bona fide employer office at your telecommuting location, you will continue to owe New York State income tax on income earned while telecommuting. For more information on telecommuting, see TSBM 065I, New York Tax Treatment of Non-Residents and Part-Year Residents, Application of the Convenience of the Employer Test to Telecommuters and Others, for all the details, and the webpage Frequently Asked Questions about Filing Requirements, Residency, and Telecommuting for New York State Personal Income Tax, which can be found on our website www.tax.ny.gov, search telecommuting. New York City follows the same rules as New York State for change of residency status. The method for computing the tax differs from New York State in that the city computes a straight tax on the income earned during the period of residency. Complete Form IT 360.1, Change of City Resident Status, if during the tax year a taxpayer had a New York City or Yonkers change of resident status. Once you know if a taxpayer is a resident or not, and that they need to file, here is the general flow of the New York State tax return. The New York return is based off of the federal return with adjustments and modifications. The flow starts with the same income items from the federal return that you put in federal adjusted gross income, but we have adjustments to that income to give you recomputed federal adjusted gross income. From there, we have New York-specific additions and subtractions to arrive at New York adjusted gross income. We then deduct a New York standard deduction or New York itemized deduction to arrive at New York taxable income. Taxable income is used to compute the tax, which is further reduced by tax credits. We'll now go through each section, highlighting where we're unique. Let's start with income and adjustments. Most income items are carried over directly from the federal return. There are some items where New York does not treat them the same way. However, those are handled through adjustments to income. The main reason we have modifications and adjustments to federal taxable income is due to New York State decoupling from certain personal income tax changes for 2018 and after. In addition, New York decoupled from other federal provisions. For tax years beginning before January 1, 2022, any amendments made to the IRC after March 1st, 2020 will not apply to New York State personal income tax under Article 22. Corresponding amendments have been made to the Administrative Code of the City of New York. Form IT 558, New York State Adjustments due to decoupling from the IRC, identifies the federal changes allowed per the CARES Act and reverses them as we decoupled from them. It also handles the adjustments necessary for decoupling from any amendments made to the IRC after March 1st, 2020. This form adds back the many items and then subtracts the allowable pieces. The form itself asks you to label what modification number it is and the amount. The instructions list each one separately and explain in detail. Taxpayers will submit Form IT 558 with their main form IT 201, IT 203, IT 204, or IT 205 to report any New York addition and subtraction adjustments used to compute federal amounts. The software should handle these adjustments for you. While you may come across other items of adjustments, these are the common areas where an adjustment may be needed. Deduction for charitable contributions, benefits provided to volunteer firefighters and emergency medical responders, modification of treatment of student loan forgiveness, exclusion from federal gross income of discharge and qualified principal residence indebtedness, and qualified residence interest deduction. For the items above, there is an add-back of the way that an item was treated for federal purposes, but some of these items are then allowed on the New York return, but in a different manner. For instance, the deduction for charitable contributions is added back, but if a taxpayer itemizes deductions, they could take it on the IT 196. Again, the software should handle any of these items. We wanted to remind you of the COVID pandemic-related topic, unemployment income, since the pandemic is still underway, and we expect you will still see this. Many New Yorkers will be reporting unemployment income due to the pandemic. Some may not have had withholding taken out for federal, state, or both taxes. In addition, we want to remind you that unemployment income is not considered earned income, and therefore it could affect any credit that uses earned income as part of its computation. Eligibility for the earned income credit, non-custodial earned income credit, child and dependent care credit, or Empire State Child Credit could be affected. Make sure you have a conversation about this topic with your clients in the upcoming tax filing season. For additions and subtractions, standard items have their own line items on the return, but other items that were necessary due to decoupling from the federal return or for addressing specific items are included on the IT 225. The computation of New York State income tax is based on the taxpayer's New York adjusted gross income, which is the recomputed federal adjusted gross income modified by certain New York adjustments. New York State taxes certain items of income not taxed by the federal government. You must add these New York additions to the recomputed federal adjusted gross income. New York State does not tax certain items of income taxed by the federal government. You must subtract these New York subtractions from the recomputed federal adjusted gross income. For these additions and subtractions, some items have their own line items on the federal return, but other items are included on the IT 225. The software will place them appropriately. Some common New York State additions include interest income on state and local bonds, net gain from casualty and theft loss, Public Employee 414H retirement contributions, New York City Flexible Benefits Program amounts deducted or deferred from salary, and New York 529 College Savings Program. Let's go into these one at a time. For interest income on state and local bonds, if the interest is from other than New York State or its local governments, an addition modification must be made. For net gains from casualty and theft loss, when there is a net gain on the New York itemized deduction for a casualty or theft, an addition modification must be made. Regarding the 414H contributions and the IRC 125 flexible benefit programs, taxpayers must report 414H retirement contributions as an addition modification to their federal adjusted gross income on the New York State return. These contributions are related to the New York State and local retirement system, New York City Retirement System, New York City Police Pension Fund, or the New York City Teachers Retirement System. The same rules apply to New York City employees who participate in the New York City Flexible Benefits Program, the IRC 125. The 414H and IRC 125 is reported to employees in Box 14 on the Form W-2. 414H pension contributions are added on line 21 of Form IT-201 Resident Income Tax Return and on line 21 of Form IT-203 Resident and Part Year Resident Income Tax Return. New York City flexible benefit programs are reported on Form IT-225 New York State modifications and then totaled with the other additions and entered on line 23 of the IT-201 or line 22 of the IT-203. For the New York's 529 College Savings Program, there are additions if a taxpayer transfers funds to another state's program, or if there are non-qualified distributions, such as taking funds out for any 5 through 12 programs. If the withdrawal is not used for higher education, any subtraction modification taken in the current or previous years on the original contributions must be added back to income. Now let's talk about subtractions. Some of the common New York State subtractions you may have seen in the past: refund credits or offsets of state and local income taxes, qualified moving expense reimbursements or expenses, interest on U.S. government bonds, New York 529 college savings programs, pensions of New York State, local, or federal government employees, $20,000 pension annuity exclusion for taxpayers 59 and a half or older, and deduction for student loans discharged due to death or disability. For refunds, credits, or offsets of state and local income taxes, while these items are included in federal taxable income, New York allows a subtraction for them. So on our return, they are in federal recomputed income, but then subtracted before determining New York taxable income. For qualified moving expense reimbursements and moving expenses, if a taxpayer received any qualified moving expense reimbursements or paid any moving expenses, there is a subtraction modification. For interest on U.S. government bonds, New York allows a subtraction for the interest. While we explained the addition modifications that could be needed regarding New York State 529 plans, there is also a subtraction allowed for contributions to a New York State 529 college savings program. Contributions are the amount contributed to the program up to $5,000, $10,000 for married filing a joint return. Only payments made during the taxable year can be claimed. Unclaimed amounts cannot be carried forward to a future year. Taxpayers must be the owner of the account. If a taxpayer contributes to an account owned by someone else, the taxpayer cannot claim the subtraction. Some taxpayers incorrectly exclude pension income or take an excessive pension subtraction. 2 New York State subtractions for pension income are allowed: 100% of pensions of New York State and local governments and the federal government can be excluded, or the $20,000 pension and annuity income exclusion. Be aware that deferred compensation or supplemental pension income is not fully excludable government pension income. A pension or annuity subtraction may only be claimed if pension income was included in total income. And you should be aware that pension and annuity income includes the tax year 2021 income getting recognized from a qualified COVID distribution that was taken in tax year 2020, where the income was spread over 3 years. If a taxpayer received pension income as a beneficiary and the decedent would have been 59 and a half if they continued to live, the beneficiary is eligible for an exclusion with certain limitations. The exclusion must be prorated among all beneficiaries in the same ratio as the distribution is shared, even if not all beneficiaries are New York residents. For students or parent borrowers that had a student loan discharged in whole or in part due to death or disability, to the extent that the discharged amount was included in federal income, there is a subtraction modification. Here are a few new subtractions you may see this year. COVID-19 Family Death Benefit Program, deduction for repayment of amounts reported in a taxpayer's income in a previous year, grants received pursuant to the COVID-19 Pandemic Small Business Recovery Grant Program. Let's go through each of these. COVID-19 Family Death Benefit. This change actually began in 2020 tax year, but will continue into this year. A new subtraction modification is allowed for any lump sum death benefit received pursuant to the COVID-19 Family Death Benefit Program established by the Metropolitan Transportation Authority in 2020 that was included in recomputed federal adjusted gross income. The modification amount cannot exceed $500,000. It would be reported on Form IT-225 New York State Modifications. Please note, this subtraction modification only applies to lump sum death benefits paid under the COVID-19 Family Death Benefit Program and does not apply to any benefit payable under such program other than a lump sum death benefit. Repayments of income reported in a prior year. A new provision was added to allow an adjustment for repayments of items of income reported in a prior year. Generally, if a taxpayer included an item of income in the computation of New York adjusted gross income in a prior year and is then required to repay any of that previously taxed income in the current year, the amounts repaid in the current year may be deducted from current year income. For example, if a taxpayer was overpaid unemployment income in 2020 and required to repay a portion of it in 2021, the amount repaid is generally allowed to be subtracted from income in 2021. For purposes of this modification, no subtraction will be allowed if the repayment amount is included in your New York itemized deduction or any other deduction allowed under Article 22 of the tax law, or you filed Form IT-257 New York State Claim of Right credit using the repayment amount as the basis of such credit. This adjustment would be made on the Form IT-225. The COVID-19 Pandemic Small Business Recovery Grant was established as part of the New York State Urban Development Corporation Act. Those who receive grants under this program and include it in their federal adjusted gross income are allowed to make a subtraction modification to exclude the amount of the grant from their New York State adjusted gross income. As you can see, there are a lot of New York subtractions. Here are a few more you may run into. Taxable amount of Social Security and Tier 1 Railroad retirement benefits, military combat pay, military pay, Form IT-203 filers only, disability income exclusion, Native American income exclusion. These are all reported on the IT-225, and the instructions to the IT-225 explain them very well. Once all the modifications to income are done, you have your taxable income, and we can now cover deductions. If the New York standard deduction is greater than the New York itemized deduction, you would use the New York standard deduction. However, if the taxpayer is married and filing a separate return and itemizes deductions, the spouse must also claim the itemized deduction, even if it is less than the standard deduction. If the taxpayer is itemizing New York deductions, they must submit Form IT-196, New York resident, non-resident, and part-year itemized deductions. The 2021 standard deduction table is the same as last year. In general, New York itemized deductions are computed using the federal rules as they existed prior to the changes made by the Tax Cuts and Jobs Act. Taxpayers cannot use total federal itemized deductions as a starting point. Taxpayers may itemize for the state even if they use the standard deduction for their federal return. Itemized deductions are handled on Form IT-196, New York resident, non-resident, and part-year resident itemized deductions. This form walks you through the computation of New York itemized deductions, and the software guides you through them as well, so we won't go through these items in the training. For additional guidance, visit the itemized deduction page on our website. If taxpayers include taxes paid for itemizing, They may need their 1099-G information from New York State. You may view and print Form 1099-G, Statement for Recipients of State Income Tax Refunds, directly from our website. We do not mail Form 1099-G. The 1099-G amount reflects the amount of state and local taxes a taxpayer overpaid through withholding or estimated tax payments. For most people, the amount shown on their 2021 Form 1099-G is the same as their 2020 New York State income tax refund they actually received. After determining the standard or federal exemption, the New York return also reflects the dependent exemption of $1,000 per qualified dependent. New York does not have a personal exemption for the taxpayer and spouse. Now that all of the adjustments and deductions are complete, the taxpayer will have their New York taxable income and compute their tax due. However, they can reduce this tax due amount further with tax credits. While there are many New York State tax credits, we tried to concentrate on the ones you are most likely to see. If you do come across a credit that is not listed in this presentation, our website has designated web pages for each credit that can offer you clear explanations to assist you. First, let's discuss a new credit this year. For tax years beginning on or after January 1st, 2021, and before January 1st, 2024, taxpayers may be able to claim a refundable real property tax relief credit for qualifying real properties on their personal income tax returns. To be eligible for this credit, New York State residents must have qualified gross income of $250,000 or less, owned and resided in New York State real property for more than 6 months, received either the STAR exemption or school tax credit, and paid real property taxes. The credit is computed using the amount of real property tax which exceeds 6% of the taxpayer's income and a specified rate based on the taxpayer's income. In order to claim the credit, the computed amount must exceed $250. The credit cannot exceed $350, no matter the amount of the computation. For more information, see Form IT-229, Real Property Tax Relief Credit, and its instructions. It should be noted, if a taxpayer itemizes deductions on their New York State return, they must reduce the amount of property tax claimed by the amount of this credit. The New York Earned Income Credit has a small update this year. The taxpayer must have claimed the federal Earned Income Credit for tax year 2021 or could have based on their New York recomputed federal adjusted gross income and recomputed earned income. Investment income cannot be greater than $3,650, and the credit is equal to 30% of the federal credit with an additional 5% for New York City residents. New York State Earned Income Credit must be reduced by the amount of any household credit the taxpayer is allowed, and its refundable status depends on your residency status. Full-year residents, it's fully refundable. For part-year residents, it's partially refundable. For non-residents, it is not refundable at all. Note, due to the different methods for computing, New York City taxpayers may have an amount of New York City Earned Income Credit and not New York State Earned Income Credit. Make sure to complete Worksheet C, New York City Earned Income Credit. We've updated the non-custodial parent Earned Income Credit for the 2021 rules. Filers may claim the non-custodial Earned Income Credit only if they meet all of the following conditions for tax year 2021. They must be a full-year New York State resident and at least 18 years of age, have earned less than $42,158 in 2021. They must be a parent of a minor child with whom they do not reside. They must have an order in effect for at least 1/2 of the tax year requiring the taxpayer to make child support payments payable through a New York State support collection unit, and have paid an amount in child support in 2021 at least equal to the amount of current child support the taxpayer was required to pay by all court orders. The Empire State Child Credit is refundable for qualifying children ages 4 to 17. Resident taxpayers may claim a credit equal to the greater of 100 times the number of children who qualify for the federal child tax credit, or 33% of the taxpayer's allowed federal child tax credit. For tax year 2018 and after, the federal amount is no longer used in calculating the Empire State Child Credit. The calculation uses the 2017 credit amounts and income thresholds. As well, the federal change to allow children to age 18 for 2021 does not apply, as we are decoupled from the federal changes made after March 1st, 2020. There are no changes in eligibility for 2021 for the claim for real property tax credit for homeowners or renters. To qualify, a taxpayer must have household gross income less than $18,000, average rent less than $450, must have paid real property taxes or rent, market value of all real property owned should be less than $85,000, they must be a resident for the entire year, and they can't be claimed as a dependent. Some key definitions for this credit: members of household are all who share your residence and its furnishings, facilities, and accommodations, whether they are related to you or not. Household gross income is income from all sources that you and members of your household receive. It does not include food stamps, Medicare, Medicaid, scholarships, grants, surplus food, or other relief. Adjusted rent is rent paid after subtracting any charges for heat, gas, electricity, furnishings, or board. Don't include any subsidized part of your rental charges in adjusted rent. For property taxes paid, when computing the amount of real property taxes paid, include those actually paid to the county, city, town, village, or school district. You must reduce the amount of taxes by any school tax relief credit received. Next is the claim for college tuition credit. Only qualified tuition expenses paid for undergraduate enrollment or attendance at an institution of higher education qualify for the credit. Up to $10,000 of tuition expenses per eligible student can be used to calculate the credit. Taxpayers can claim a 4% refundable credit or use the tuition expense amount as an added itemized deduction. For tuition expense under $5,000, the credit is the lesser of $200 or the tuition expense. Expenses may be paid by cash, check, credit card, or with borrowed funds. The eligible student doesn't need to be enrolled in a degree program or to attend full-time for the expenses to qualify. If the student is claimed as a dependent, these payments are treated as paid by the taxpayer. The claim for volunteer firefighter and ambulance worker credit is a $200 refundable credit, or $400 if married filing jointly and both spouses qualify. The taxpayer must be a full-year resident and active volunteer firefighter or ambulance worker for the entire year for which the credit is claimed. Use IT 201 ATT code 354 on line 12. A taxpayer cannot claim the volunteer firefighter and ambulance worker credit if the taxpayer receives a real property tax exemption that relates to their volunteer service. The claim for long-term care insurance credit is for premiums paid for qualified long-term care insurance. The credit is equal to 20% of the premiums paid during the tax year for the purchase of or for continuing coverage under a qualifying long-term care insurance policy. Remember, health and life insurance premiums do not qualify for the credit. The credit is only available to taxpayers with a New York adjusted gross income of less than $250,000 and is capped at $1,500 per return for taxable years beginning on or after January 1st, 2020. The refundable nursing home credit is available for the amount of assessment imposed on a residential health care facility. The assessment must be separately stated and must be paid directly by the individual taxpayer claiming the credit. Credits equal the assessment amount, not expenses, separately stated and accounted for on the billing statement. Use IT 201 ATT code 258 on line 12. The Child and Dependent Care Credit can be claimed if qualified to claim the Federal Child and Dependent Care Credit, whether it was claimed or not. The credit is a minimum of 20% of the federal credit, or it may exceed the federal credit, depending on the amount of the New York State adjusted gross income, the number of qualifying persons, and the amount of qualifying expenses paid. The credit is fully refundable for residents, non-refundable for non-residents, and partially refundable for part-year residents. The New York City credit can be as much as 75% of the New York State credit. Remember, the amount increased starting in 2018 for taxpayers with New York adjusted gross income of at least $50,000 but less than $150,000. Qualified expense limit increased for taxpayers with more than 2 qualifying persons as follows: $7,500 for 3, $8,500 for 4, and $9,000 for 5 or more qualified persons. Currently, temporary special rules are in place for unused amounts in a dependent care flexible spending account, allowing employers to amend their dependent care plans and allow employees to carry over unused benefits from a plan year ending in 2020 to a plan year ending in 2021, and from a plan year ending in 2021 to a plan year ending in 2022. Your employer can tell you whether your dependent care plan was amended. In addition, there's a temporary carry-forward rule for dependent care flexible spending accounts where the dependent aged out. If the taxpayer's plan adopted this change, they may use unused dependent care benefits from 2020 plan year carried over into 2021 to pay for a child under age 14 for 2021. This relief only applies to amounts received from a dependent care plan. It does not apply to amounts the taxpayer paid outside of a dependent care plan. Caution: do not enter any amounts that are not used in this year. If the taxpayer carried forward dependent care benefits from 2020 to 2021 and did not use the benefits in 2021 and are carrying the benefits forward to 2022, you would not include those amounts for this year. Let's review the college tuition credit or deduction. The qualified expenses for this credit and the itemized deduction are listed on the IT 272. However, a taxpayer cannot take both the credit and the deduction. There is a worksheet included to help determine which is more beneficial. Do not claim the following as qualified expenses: graduate level tuition expenses that are paid by scholarships, grants, and/or an employer, expenses for room board, insurance, medical expenses and transportation, course-related books, supplies or equipment, and fees paid as a condition of enrollment, attendance, or non-academic activities. Additionally, do not claim tuition expenses in a different tax year than they were paid for, or a college tuition credit for someone who is not the taxpayer or a dependent. Remember, be sure to provide the correct student Social Security number and correct college employer identification number on Form IT 272. The Employer Compensation Expense Program wage credit is available for individuals who worked during the year for an employer who elected to participate in the Employer Compensation Expense Program and received taxable New York wages and compensation from that employer for the year that exceeded $40,000. It's filed on Form IT 226, Employer Compensation Expense Program wage credit. Note, the credit is not refundable but may be carried forward. Now that we've gone over the basics of the return and some of the common credits, it's time to finish it up so that the return can be e-filed. New York State has a personal income tax e-file mandate. We support both linked and unlinked returns. Even if the IRS will not accept a return, the state return can be filed as an unlinked return. Most software allows unlinked returns. All forms can be e-filed either directly through software or by PDF attachment to the filing. While tax return preparers that filed returns for more than 10 different taxpayers during the year fall under the e-file mandate, volunteer preparers are not subject to the e-filing mandate. You should make sure to use the 09 Volunteer Tax Preparer Code in your program. Driver's license ID information is used to protect taxpayers from fraud and identity theft. The document number for the primary taxpayer and spouse are required, but only the first 3 characters of the document number are required. If the taxpayer won't disclose their ID information, you may check the box to indicate the taxpayer does not have an ID. And you must document you used due diligence to obtain the information and the taxpayer refused. You must ask taxpayers if they have any sales tax owed. New York State sales tax is owed if the taxpayers purchase property or a service delivered to them in New York State without payment of sales and use tax. This includes purchases through the internet, by catalog, or from shopping channels on the television. Most tangible personal property is subject to tax. Do not leave the line blank. Do not set software to autofill with 0 amounts. Here are the new voluntary contributions for tax year 2021. First, the new voluntary gifts you will see on this year's form are only available to personal income tax filers. Gun Violence Research Fund. The funds collected will be sent to the Department of Health and the State University of New York for gun violence research. The Department of Health and the State University of New York shall provide grants for the purpose of advancing and financing gun violence research. The Substance Use Disorder Education and Recovery Fund. The monies of the fund shall be made available to the Office of Addiction Services and supports for the purpose of providing grants to organizations dedicated to providing education, prevention, treatment, or recovery to those suffering from substance use disorders pursuant to Section 19.45 of the Mental Hygiene Law. The second group of voluntary gifts are available to personal income tax and corporation tax filers, but are not effective until 1/1/2022. There are 2 gift funds. One would allow taxpayers to contribute to the New York State Thoroughbred Breeding and Development Fund for retired and rescued thoroughbred race horse aftercare. The other would allow taxpayers to contribute to the Agriculture and New York Horse Breeding and Development Fund for retired and rescued standard bred racehorse aftercare. Towards the end of return filing, there will be questions to see if taxpayers want to allocate all or a portion of their refund into up to 3 New York State 529 college savings plan accounts. This is for Form IT-195 Allocation of Refund. Please note, if a refund claim is reduced or denied, the disbursements to the New York State 529 will not be processed. Now we want to cover a few other reminders for return filings. You should always enter the date of birth if a form requires the information. If not provided, taxpayers may not receive credit amounts they are entitled to based on age. This can lead to adjusted refunds and refund denials. In addition, make sure to include relationship information. This information is included on Forms IT-215, Claim for Earned Income Credit, and IT-209, Claim for Non-Custodial Parent, New York State Earned Income Credit. With regards to attachments to returns, they must be in PDF format. Your software should provide assistance on how to attach. Don't password protect, encrypt, or in any way document protect PDF attachments. For both the federal and New York State returns, worksheets must be completed to support the information on a return. A copy of the return should be printed and maintained for at least 3 years. It's important that all worksheets be printed and kept with a copy of the return. Taxpayers must maintain all documents that substantiate entries on a return. Worksheets are part of their supporting documentation. It's important to mention to your clients that taxpayers must file an amended New York State return to report any changes made to their federal return within 90 days of the federal change. Even if the item of omission is not taxable to New York State, It should be included on an amended return since it could result in reductions to itemized deductions and credits. If New York State issues a bill for unreported federal changes, an amended return should not be filed. Follow the instructions on the billing notice instead. Finally, let's go over some key information on department programs and initiatives. We know you may have some clients who come to you because they received a notice from us. Let's cover a few notices that you may see this year. First, you will still see wage and withholding notices. The reason taxpayer may receive one of these notices are the wage and withholding information on the tax return may not be consistent with the information the department received from their employer. The employer may not have filed the wage and withholding form timely. The client has multiple jobs, and we didn't receive information from all of their employers. There could also be an error on the withholding information and/or the tax return. Or it could be fraud-related. While we hoped the new quarterly filings would have helped taxpayers more, unfortunately, some employers are still not timely filing their returns, or they're filling out the return incorrectly. So letters will still go out on this topic. There are other notices you may see this season. Clients may have received a residency request for information letter. These letters may have had a questionnaire to fill out. Most of these notices are related to individuals telecommuting during the pandemic. In addition, clients may have received a bill if unemployment income was reported incorrectly on the 2020 tax return. Some taxpayers did not report all or part of the unemployment income. Remember, there is information on both of these topics in the Find Resources for Taxpayers section on the volunteer website. Identity theft is a serious issue. If a client thinks their identity may have been compromised, they should notify the Federal Trade Commission at www.identitytheft.gov. They should also notify taxing agencies or respond immediately to a notice, which includes IRS Form 14039 or New York State Form DTF-275. And they should contact their credit bureaus to place a fraud alert on their credit record. Equifax's number is 1-800-766-0008. Experian is 1-888-397-3742. And TransUnion is 1-800-680-7289. Also, visit our website at www.tax.ny.gov, search Identity Theft. There, you can complete Form DTF-275, Identity Theft Declaration. You could fax those documents to 518-435-2990, attention Identity Theft. Mail them to New York State Assessment Receivables, attention Identity Theft, P.O. Box 4128, Binghamton, New York, 13902-4128, or call 518-457-5181 for more information. This is a reminder for helping your clients who may have gotten a notice of driver's license suspension related to a tax bill. The criteria for protesting a driver's license suspension by the tax department was expanded last year to include taxpayers who receive public assistance, supplemental security, or Social Security disability insurance income, or can demonstrate that the suspension of their driver's license will result in undue economic hardships. Taxpayers requesting relief must submit Form DTF-5, Statement of Financial Condition, and DTF-5.1, Application for Undue Economic Hardship Exemption from Driver's License Suspension Program. If you have clients that feel they are not getting the help they need, you could refer them to the Office of Taxpayer Rights Advocate. This office provides free and independent tax problem assistance, ensures that taxpayers' cases are reviewed in a timely manner. They help taxpayers understand important notices and deadlines. They explain taxpayer rights and responsibilities under the law and help resolve long-standing tax issues. Please remind taxpayers that they can get access to their tax information whenever they need it by using an individual online service account. Here, they can file returns and make tax payments, resolve issues faster by responding to department notices with supporting documentation, They can get instant confirmation and an electronic postmark when timing is most important. As well, it will eliminate phone calls and hold times. In addition, the department has many subscription services that will keep taxpayers informed. Anyone can subscribe to these, and there is a tax tips for individuals subscription that will give information not only on tax reminders, but for financial literacy. Speaking of financial literacy, remember to tell your clients about our financial education program, which can be found on our website. This program is broken into 7 modules to help taxpayers have a better understanding of taxes, credits, and much more. There is a whole section on self-employment resources, including a mileage log and tax deduction tracker. We provided a link for you on the volunteer page under Find Resources for Taxpayers section. Share it with the taxpayers you assist. We covered a lot with this training. I hope it will help you to help others with filing their 2021 tax returns. Thank you again for all that you do to help the taxpayers of the state of New York.